Brad Williams, Frugal Finance. How often should you pay your credit card? Paying your credit card bill is a key part of managing your finances responsibly. But you're not limited to just one payment per month. While paying in full by the due date is standard practice, making smaller, more frequent payments throughout the month can offer several benefits, especially if you carry a balance. Here's why you might want to consider making multiple payments and when it's not necessary. Why pay more than once a month? Reduce interest charges. If you typically carry a balance on your credit card, making more frequent payments can lower your average daily balance. Interest is calculated based on your balance throughout the billing cycle, so paying off part of your balance mid-month can help reduce the amount of interest you owe. Even if you pay the same amount, breaking it up into smaller payments can result in lower interest charges over time. Match payments to paychecks. For some, it may be easier to pay their credit card bill in smaller chunks as money comes in. For example, you can pay a portion each time you get paid, whether that's weekly or bi-weekly. This strategy ensures that you don't spend the money before it goes to your credit card and aligns better with your budgeting schedule. Help your credit score? Credit scoring models such as FICO factor in your credit utilization ratio, how much of your available credit you're using. By paying down your balance more frequently, you reduce this ratio, which can help improve your score. Plus, when your balance is lower at the time the credit card company reports to the bureaus, your credit utilization looks better, which is a key component of your score. Avoid late fees. Making a payment earlier in the month ensures you meet the minimum payment requirements, preventing late fees and the potential damage to your credit score. Additionally, some people find that paying off part of the balance earlier removes the stress of forgetting about the due date, especially if they're prone to forgetfulness. Stay under your credit limit. If you're nearing your credit limit, making multiple payments can help you keep some room on your card to make more purchases if necessary. Keeping your credit usage low is important, as using a high percentage of your available credit can hurt your credit score. Psychological motivation. If you're in debt, paying your card in smaller chunks might give you a sense of accomplishment as you watch your balance shrink more frequently. This visual progress can provide the motivation needed to stay on track and continue making payments. When not to make multiple payments? If you're able to pay your balance in full each month, there's no real benefit to making multiple payments. Credit card issuers typically offer an interest-free grace period for those who pay their balance in full by the due date. If you're consistently paying up your balance, you won't incur any interest charges, and frequent payments aren't necessary. Additionally, if you don't plan to apply for credit in the near future and always pay on time, you can simply automate your monthly payment and avoid the hassle of making mid-month payments. Conclusion, paying your credit card multiple times a month can be a smart strategy if you want to reduce interest, improve your credit score, or simply match your payment schedule with your paycheck. However, if you're paying your balance in full every month and don't carry a balance, there's no need to make extra payments. Ultimately, it's about finding a system that works best for your budgets and financial goals. If you have any questions relating to paying off your credit card, Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.